creating this video for Alibaba analysis. This video is created mainly for my own purpose. I want to see what my thoughts were of this company today. After a year or so, I would like to look back at this video and see where my thoughts were, how I thought, what shares, what price I was predicting, what went wrong, what was right, and that will help me to be better analyst of the shares. So I believe Alibaba is a great company. However, it is dropping in value by a lot than expected, and that is mainly because of US and China relationships and Chinese government's regulations, stricter regulations. Especially since Jack Ma did a couple of bold statements against the state in 2020, and then he was gone missing, but later he was seen at a couple of places. Bad news first. So Jack Ma was missing in 2020. After that, he was seen a couple of places like Spain and others. He published some videos. However, still he's not roaming freely, and he's not associated. He's not a CEO of the company anymore. Last quarter result was bad. They have reduced their revenue. There are a lot of competition. JD is coming forward. There are delisting fears. China has just requested the DD company for delisting from US market, and the DD company has already started procedures, and they have agreed that they will delist from US and they will be listed in Hong Kong. So a lot of bad news going on in the market. So obviously the share is dropping down, but we need to see if this really gives us the good opportunity for buying as a long-term value investors. Like Warren Buffett and Charlie Munger said, that the more fear in the market, there are more opportunities for value investors in the long term. On the technical analysis, the stock is trending at the support level of 120. It just broke that level, which is bad. And as a technical analyst, it is continuously on the slight turn, and I need to be cautious. At this pattern, usually it is suggested to sell at high and buy at the dips. So at this level, usually short selling or buying puts is considered as better option. It had this support. If it come back from this support, I expect that the uptrend will be better. But if it goes down, it continues this for a couple of more days, then it may touch it, 2 digits also. It may be at 85. It may find next support at 85 or something, which is bad. On the RSI, the lower the RSI means the more chances of the stock going up. Higher RSI means the stock chances are more for going down. So at this level, since almost 8 months, the RSI is too low, and this if it starts going, I expect the stock price will also start go up. On the latest quarter, their revenue is increased by 29%. Analysts were expecting 29.4%. Not a big deal. On their number of users increased to 1.24 billion, which is amazing, like tremendous. The number of users, imagine it's much more than population of US. Their income from operation is reduced, but mainly the reason is giving that they have expenses in share-based compensation, and they are invested back into the business for various strategic ideas. Their income, because of this reason, reduced for the quarter by 39%. If this is just for a quarter or so because of the business investment, then that is fine. This is actually good for the business. They should keep on reinvesting into the business. They have reduced their revenue growth from 29-30% to 20-23% year over year. I don't think it is bad at a company at this level, earning $100+ billion per year. 20-23% growth is also good. Some key points which I would like to highlight from the result is their expenses are increased about the business strategic reinvestment, which reduced their profit. They have huge cash of $80 billion. They used $5 billion to buy 26.9 million US shares in this quarter, and they're planning to buy more, $10-15 billion more in the coming quarters. The more share repurchase, the better for the company. Investors also get more confidence that the company is thinking that this share should go up. On the fundamental analysis, in 2011, they were earning $1.7 billion. And in 2021, they're earning $109 billion, so almost 90 to 100 times more growth. Same for EPS, they were earning 7 cents per year per share, and now they're earning $8.49 per share, which is almost 120 times growth. So this is amazing growth they have. The share is currently trading at a level of 2014-15. At that time, the revenue was just $8 to $10 billion, and earning was just less than $2 per share. So I believe this share is really, really cheap, and everyone accept that. People are just concerned about the government regulations and risks. It's my own analysis. I have compared Amazon and Alibaba share. The revenue of Alibaba is 109 billion for 31st March 2021. For Amazon on 30th December 2020, it was $386 billion. so 3.5 times more. However, if you see the profit, the net income, Alibaba's net income was more than Amazon. So even though Amazon has 3.5 times more revenue, the net income is almost same. Earning per share, if we consider the same number of shares, the earning per share also is more for Alibaba. At the current price, if you compare, if we assume that the number of shares are same, Alibaba's price is $110, Amazon price is 633. So imagine two companies having same, almost same income every year. Their difference is almost 6 times in price. So Alibaba is 6 times cheaper. Even though I believe Amazon is a US company and they obviously benefit such a US company compared to China, but still the price valuation should easily be 200 to 300. Also put the Singles Day revenue on every year. Singles Day is 11th November, which is like a Black Friday for China. On this day, every year, Alibaba provide how much sales they did. Last year they did 78 billion. This year they did 84 billion. So this is one of the biggest sale they have out of $84 billion. That means this year they just grew by 8%, and that is what investor did not like because Alibaba was growing at a speed of 20 to 30% every year. However, 2020, we all know that the pandemic had started, people moved to online shopping, and that's why it helped Alibaba to grow. However, this year it was not the same case, but still growing at 8% is not a small thing. It's a big achievement that they have earned $84 billion in just one day. Their forecast is now 20%. So till now, their last year's revenue was 109 billion. If we consider even low forecast 20%, which I think they should achieve, with that, after 5 years, their revenue should be around $272 billion, and earning per share with current price of share 110 is around $21 per share. So with your $110 investment, after 5 years, you are expecting $21 earning per year, which is like 20% profit. Your 20% interest you are getting on your investment, which is very very difficult for any company to provide, especially with such a special brand. On analyst, I have seen a couple of websites. Some analysts are forecasting minimum 170 level, and some are now forecasting 32 level. So it again depends on the risks. However, if it coming, I would suggest it's a good price at the buy. But if it is coming down, keep adding the shares for the long term. Some summary: they have amazing fundamentals, they have strong brand, they have 20 to 23% growth focused, which is great. They are very, very, very lucrative at this price. Their share repurchase should increase in coming quarter because this price is really low. On the downside, they have missed top line, which is not really a big concern. It's almost same as what analysts were expecting. Their bottom line is missed, which is a concern. However, if that is mainly because of strategic reinvestment, as they are saying, then it and share-based expenses to the employees, then it should be one time. And strategic investment is good for the business anyways. So I would like to see the next quarter's earnings. Reduced growth forecast from 29 to 30% to 20 23%, which is okay at this level also. Even if they are growing at 20 23%, $110 price is really comfortable. Lack of support on charts below 120, we have seen on technical analysis. Below 120, they might go to 85 too. So I would not put all my money once, but I would like to start investing into it. I personally I'm invested in since $155, 162, and I would like to continue watch it and keep buying the shares. I'm not they have increasing competition, but I'm not much concerned about this because even the retail industry is growing, especially China, India. The retail industry is growing a lot. So even if there's a competition, still Alibaba is having more than 50% of that retail industry's pie, and even that should also increase with the increased competition. I'm mainly concerned about regulatory concerns. If China comes to Alibaba, asks to delist or do some really bad thing, unexpected thing, then that will really impact this company, and then the share will drastically reduce even further. The chances should be low for this. There is a probability, but that probability should be low. I don't expect Alibaba to be delisted. For Didi, there were reasons. Even China given some warnings even when they had listed the shares in US in July. So Didi was a different case. Alibaba, can they delist? Yes, they can, but there are a lot of other factors they need to look before delisting. So there is a risk. Look at the risk, so don't invest blindly. However, we can start investing and take the risk if there are a couple of good statements from state, if there are a couple of good news from US, China, or if there are multiple appearance by Jack Ma, some speeches, those things will really help the stock to rebound, and that rebound will be exponential rebound in my way. So yeah, in summary, I would start buying the shares. I will buy more shares on more dip. However, I will not put more than some amount which, if lost, I would be really panicked. Thank you.